South Africa is stepping up efforts to fight xenophobia. These killings, of course, have sparked a continent-wide response of anger and fury, and now it's moved on to calls to boycott products, services and even businesses from South Africa. But ultimately, who gets hurt here? South Africa alone or both parties involved in the transaction? We'll be answering that question right here in Global Business. Thank you very much for your time this evening. Here's what's coming up. Egypt's economic recovery plans gets a $6 billion boost from her Gulf allies. And Cote d'Ivoire is rolling out an ambitious plan to revive its dairy and livestock industry. Now, as has happened so many times earlier in the week, let's start in South Africa, where the government is stepping up efforts to address xenophobic sentiment and violence, which has claimed at least 7 lives so far, while displacing thousands more. This week, President Jacob Zuma will be holding a series of meetings with senior ministers and community leaders to address concerns and misconceptions around migrants, as well as the well-being of foreign nationals. On Wednesday, President Zuma held a meeting with the various sectors that was built to deal with migration issues. Now, it appears that the government so far is adopting a multi-pronged approach to this problem.
Also understanding that they need to embrace other sectors in addressing the problem. It's not just the government that can step in and solve the problems here. It's a collective effort, and at least if we know what the drivers are that are causing the problem, we can start addressing those.
Government has come out at a top leadership level to condemn and to go out and take action. I think an act such as the President cancelling a state visit to Indonesia so that he could be hands-on demonstrates that there's a realization this time that this has just gone on too far, and there needs to be a curtailing of the criminality immediately, as well as making sure that it doesn't happen again.
Now let's look at reactions to developments in South Africa from West Africa. Over in Ghana, some legislators are actually calling for boycott of South African businesses operating in the country in response to that wave of xenophobic attacks which started over 2 weeks ago. As Katerina Vitozzi reports, however, if the legislators get their wish, an economic boycott will not just hurt South African companies.
In response to the attacks on foreigners in South Africa, a handful of members of parliament here in Ghana have called on citizens to boycott South African businesses and not to buy South African products. Similar calls have also been made in Nigeria. Now, here in Ghana, South Africa has a wide footprint. It has a large number of retail outlets such as supermarket brand ShopRite, telecommunications giant MTN is also here, and there are a wide range of other small and large-scale infrastructure projects which have been completed or are underway. Now, the head of the Ghanaian and South African Chamber of Commerce has called for this boycott not to go ahead. He said, I quote, that Ghana would not stoop so low in order to voice its discontent with what is happening over in South Africa. He also said that the thousands of Ghanaians who work in those South African businesses here in Ghana would also be adversely affected if that boycott were to go ahead, which does seem unlikely. However, to voice discontent over what's happening in South Africa, there are discussions currently underway here in Ghana for street demonstrations and protests in the coming weeks. Katerina Vitozzi, CCTV, Accra.
Now, let's head off on a related tangent to that story. Youth unemployment has been cited as one of the main triggers, or proximate factors, if you will, to the violence we're seeing in South Africa. But this is a problem that many an African country does face. Now, some, like Kenya, for example, have resorted to solving that problem by allocating scarce taxes to revolving funds and then provide seed capital to informal enterprises and in the hope of creating jobs. A 2013 study by scholars at 3 Kenyan universities, however, found a repayment rate of less than 50%. Now, at that level, the fund isn't just wasting capital, it's not really a cost-effective job creation tool either. So, beyond just throwing money at the problem, therefore, what can governments, at least in East Africa, do to nurture entrepreneurs? That's a question I put to Ibada Ahmed, the Vice President of the continent's biggest single network of entrepreneurs.
It is one thing to say I have $500 million to stimulate SMEs or to stimulate entrepreneurs, but it's another thing to apply it. You cannot use foreign-owned organizations or individuals who do not understand the African economy. When I say understand, I do not mean just understanding the basic way of how these businesses work, but it's for you to understand how the guy at River Road does his business, how the florist, the horticulture, floriculture, you name it, whatever industry you choose to look at, what are their real needs? What do they require?
Do we need, therefore, perhaps to rejig the focus of governments from just looking at providing capital to instead perhaps a more stronger emphasis on actually making sure that the environment in which these entrepreneurs operate is as conducive as possible?
Rama, I would suggest, and I've always said this, is to remove the influence of government from entrepreneurship. They're lawmakers, and their job is to put certain laws in place and create an environment where businesses can flourish, where trade negotiations are beneficial to the average Kenyan or East African businessman or woman. They need to hand over this expertise to people who actually understand. I mean, who are lawmakers at the end of the day? Is it a technocrat? Is it the president of the country? Is it the trade commissioner? We need to separate politics from economics. The two don't mix.
Indeed. One last question for you. Entrepreneurship ultimately isn't for everyone. It can be long, it can be arduous, it can be very tough. How do we deal with the stigma of failure? Because most entrepreneurs at some point have failed in their businesses, but the people who are coming into the labor market have been coming from an education system that condemns failure.
From my experience, and this is looking at the 19 African countries that were involved with, 87% of business startups do fail. Not for any other reason. Your father could be someone who's been in business for a number of years, or you could be just an exceptional innovator. But if you cannot understand the dynamics of finances and understand that just because you made 3 shillings profit or $3 profit, that is your net profit, you need to separate the two. And it comes down to financial literacy. And you as an entrepreneur needs to understand how the markets work. And a lot of African governments say that we have a fund for entrepreneurship, we have a fund for SMEs, we have in Kenya the Women Economic Fund. But does it really benefit the average individual? If you give me money, it's one thing, and to expect me to pay back, or even if it's a grant per se, where I don't need to give back anything, do I really understand the nitty-gritties or what I really need to do with that particular business? A lot of people understand profit. They do not understand the logistics of running the business, or they might have an idea, but you need far more much than that, Rama.
Part of my conversation earlier on entrepreneurship with Ibada Ahmed. Now let's move on to our lead story, the one, of course, about the reaction South Africa's government has been putting in place to the xenophobic violence that we have been seeing in the country, starting in Durban about 2 or so weeks ago and spreading later on to other parts of the country. Let's get some reactions now from Deji Badmus, who's been keenly following developments in Nigeria in reaction to events, of course, in South Africa. Deji, so far as we know, no Nigerian national has been killed, but the property of some have been destroyed, vandalized, stolen, looted and so on, and some have also been displaced. Quantify the damage for us.
Rama, you're quite right. Nobody has been killed. No Nigerian has been reportedly killed in South Africa. But the fact is that from what we gathered from Nigeria's High Commissioner to South Africa, that was sometime last week, she estimated that the losses incurred by Nigerian in these xenophobic attacks would be around 1.2 million rand, and that would be something around 22 million naira here. And but we do not know for sure what has happened between last week and now, because obviously we understand some other Nigerians have also been attacked. And she also said the bulk of the Nigerians who have been attacked have had their shops looted. There's a mechanic workshop that was actually destroyed, owned by a Nigerian. But in terms of exact figure, as at last week, she said 1.2 million rands, Rama.
Indeed. I know we're smack in the middle of a transition phase between the outgoing and the incoming administration in Nigeria, but are there plans by either party to demand compensation from South African authorities for those affected by the violence?
It's not even a question of plans, as a matter of fact. The Nigerian government is actually asking for compensation. Yesterday, the South African High Commissioner to Nigeria met with a committee of the House of Representatives, and the chairman of that committee actually passed the resolution reached by the House of Representatives now to the High Commissioner demanding compensation for Nigerians who have lost their property in these attacks. And we also have other groups calling for compensation as well. As a matter of fact, the Senate as well has asked for compensation and has even asked the federal government, I'm talking about the executive arm now, to go a step further by adding the king of, that's the Zulu king now, taking him to the International Criminal Court. So, of course, Nigeria has been asking for compensation, but the High Commissioner has said, I'm talking about the South African High Commissioner to Nigeria now, Louis Mguni, has actually said, well, that what South Africa is trying to do at the moment is to save lives, and it will discuss the issue of compensation much later when this whole thing calms down.
Indeed. We'll have to leave it there for the time being. Thank you for the input. That's Deji Badmus on the phone line live from Lagos, Nigeria. Let's make a quick run now through equity markets here for you. Another day of mixed performance right across the board. The JSE, despite, of course, all the chaos that we're seeing in South Africa, up by 0.6. The EGX 30 also in positive territory. Some interesting questions, however, around the fiscal aid that has been delivered by the Gulf Arab states and the effect that will then have, of course, on the cash flow of the Egyptian government. We'll be covering those two topics a little later in the program. Coming up next, Egypt's economic recovery plan has gotten a $6 billion shot in the arm from her Gulf allies. And villages are lighting up in Ghana thanks to a household pay-as-you-go solar power system. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
Welcome back to the program. You're still watching Global Business Africa. Now, the IMF has commended Zimbabwe's progress in implementing its macroeconomic and structural reform programs. In its first review of the staff-monitored program, the fund also lauded the country's efforts to roll out initiatives to restore confidence and improve the soundness of its financial sector, while at the same time strengthening public financial management. According to the IMF, Zimbabwean authorities have stepped up their re-engagement with creditors too, and that includes increasing payments to the World Bank and the African Development Bank. That said, the fund still insists that Zimbabwe is in debt distress and economic growth is expected to weaken in 2015. Saudi Arabia, Kuwait and the United Arab Emirates today reiterated their support for Egypt's current authorities by lending the country $6 billion. Now, each of those three states deposited $2 billion into the country's foreign exchange holdings. The trio of oil-rich Gulf countries have supported Egypt in cash and kind since the Egyptian army removed the former president, Mohamed Morsi, from power following mass protests in the middle of 2013. Earlier in March, Saudi Arabia, Kuwait, the United Arab Emirates and Oman pledged to contribute $12.5 billion in aid and investments. Egypt is a close ally of the Gulf powers. It's taking part in a Saudi-led military coalition that has pledged to defeat the Iranian-allied Houthi movement in Yemen. Now, Yasser Kim, of course, has the latest developments for us from the Egyptian capital and a bit more analysis on these developments. Yasser, between the $6 billion deposit in the Central Bank of Egypt and the $2 billion that the country aims to raise from Eurobonds later this year, how does this then change Egypt's debt to GDP ratio and debt service as a percentage of tax revenues by the end of the year?
Well, if you look at the overall numbers, they are improving. The debt ratio to GDP has reached 90.5%, still high, but much better than last year, at least 10%. The budget deficit to GDP has reached around 10%. It was over 11.5%, and they're trying to target 9% this year. There are improvements, but it's still too high. The economy is still suffering. Numbers are not back to normal, but with the aid of the Gulf Arab states and with the investments pouring in, we can see that the growth, for example, is targeted at 4.2%. But the end of this fiscal year, it was 2.2% last year. The first half of 2015 has reported a 5% growth, economic growth. So there are improvements there, and all these factors are working together to push the economy forward, though there's still a long way.
Indeed. About 2 or 3 years ago, when Qatar was the one providing the aid to Egypt, we kept asking a simple question: at what point does the debt become too much? And it seems now that Egypt has simply flipped creditors, trading Qatar for the Gulf states. So what's changed in Egypt's public finances to make the country more confident now on taking a lot more debt?
Yeah, it didn't just trade Qatar, it traded Qatar, Turkey, and the IMF. It turned down an offer by the IMF for a loan, and it's preferring the Gulf states. But there has been economic reforms. There have been strict austerity measures, which led to a reduction in expenditure. We've seen the oil prices, international oil prices, have gone down, which is easing the budget a bit, especially that Egypt pays a lot as subsidies for oil, though it has been reduced, but still it's a big portion, and the lower oil prices have helped the budget. There's been an influx of revenue that had stopped for the past few years, such as tourism, such as foreign investments, not as normal, not as pre-2011 levels, but they are gaining momentum. And the strong backing by the Gulf states, this has all given encouragement to the government to still go into borrowing, but still a lot of experts are saying this has to stop soon and to start to rely on itself, because yes, the foreign reserves have jumped now to 22 billion from 15 billion dollars foreign currency reserves, and that's also a positive outlook. But it still needs to slow down into borrowing and start to find other means to raise revenue and to spend on itself rather than borrowing money, because at one point you have to pay this money back.
Indeed. Speaking of paying the money back, that $6 billion has a 2.5% interest rate per annum and a maturity of about 3 to 5 years. But we know these three countries collectively have pledged over $12 billion in aid to Egypt. So what are the terms for the remainder of that support?
We're not being told about the terms at all. Even the $6 billion that have been received this week, we were not told about any details until they were received, and then it was announced the terms. But it could go either way. Either it will be the same terms for this next $6 billion, or, as mentioned before during the summit, the economic summit in Sharm el-Sheikh, that part of this money will not go as loans, but it could be in the form of oil, could be in the form of investments and grants. But yet we are not receiving any confirmed reports. There are rumors, there are talks of what I've just mentioned, but nothing confirmed. And once they are here, those $6 billion, we will know on what conditions they have been sent to Egypt.
Indeed, we'll have to wait for the transparency on those particular deals to come through. Thank you for your input. That's Yasser Hakim, live in the Egyptian capital of Cairo. Now, there's a new drive to connect 100,000 homes in rural Ghana to the national electricity grid. Roughly a quarter of the country has absolutely no access to electricity. Now, since the government in Ghana is smack in the middle of a power crisis, the task of expanding grid access has now fallen to the private sector. Katerina Vitozzi has more on What's Hot tonight.
How to create a brighter future. Ghana's already struggling to meet power demands in its urban areas, but there's another challenge: how to reach people in rural communities who don't have access to mains power in the first place.
We have about 76% nationwide coverage in terms of access to electricity, and we believe that we'll reach 80. But the fact remains that there are some communities that we simply cannot extend electricity to in the short to medium term.
For now, finances are tight at Ghana's 100% state-owned energy company. So a UK tech firm has stepped in with a solution: household pay-as-you-go solar systems. The cost of installation is the biggest barrier to people using solar power in their homes. The pay-as-you-go system spreads that cost over time. Developers say it's cheaper than buying fuel for lamps and also paves the way to better standards of living.
And what we find is that because people have elementary lighting and they have mobile phone charging, they save money in real terms and they make more money because of the other activities that they're doing. And so after a period of time, typically about 2 years, we find the vast majority of people come back and say, you know what, we love this thing, but actually want a bit more. We'd like a radio, we'd like a fan, we'd like a TV, we'd like access to the internet. And progressively, in steps, people go up what we call this energy escalator, where people get closer and closer to the knowledge economy.
These solar systems are small, but a step in the right direction. In 2012, West African governments decided that solar power should make up 10% of their total energy mix. But it's been a challenge to get there. Financing and regulation problems means it's a tricky market to enter for smaller local firms who not only want to turn a profit, but want to bring light to communities currently in the dark.
What we want to do and what we're fighting for is creating a strong bridge between these situations where we're able to assist or enable a child in the community, in the village somewhere, to be able to read and write at night, to enable that woman to have 3 more hours to run the business after sunset, and to be able to run community libraries so children can study, and of course, create businesses for community members.
This isn't just a Ghana problem. Only 32% of people living in sub-Saharan Africa have access to mains electricity. Katerina Vitozzi, CCTV, Accra.
Let's make a quick run through commodity prices here for you. Crude oil, that's still, of course, rising further and further, up 64.19, up about 2 percentage points, give or take, on Brent crude. That's a fairly interesting development over there. However, more interest, at least to some of our African viewers, you will recall earlier in the week that Zambia essentially backtracked on plans to increase mining royalty rates, and it's developing quite a response from mining companies. Barrick, for example, Barrick Gold has backtracked on its decision to suspend operations at its Lumwana open pit copper mine. However, keep in mind that reversion to a 9% flat rate on both open pit and underground mines is yet to be approved by Parliament. That could be quite the stumbling block. Coming up next, we'll be looking at Cote d'Ivoire's ambitious plan to revive its dairy and livestock industry.
I doubt whether he knows anything about corruption.
We love Kirak very much.
I'm a servant of the people. These people give me a mandate. I cannot be considered a colonialist because if I was a colonialist, I would have imposed myself on people.
People see him, he's out there and he's very vocal. People know he's trying his best.
Think, what's my business? Am I growing mushrooms? Am I raising chickens?
Ian Clark, African politician with a difference. Is he a new colonial master or a champion of the people?
People did say our Ugandan politicians have failed us. So let's try this guy.
Mission to Mend, the restless world of Ian Clark.
Welcome back. Now, farmers in Cote d'Ivoire are urging the government over there to provide them with credit in order to enhance the output of the nation's meat and dairy sector. Now, while the country's cocoa and coffee sectors employ roughly 2/3 of its entire workforce, Cote d'Ivoire remains heavily dependent on food imports. On Grassroots tonight, we'll be exploring the livestock industry in Cote d'Ivoire and the opportunities therein.
This West African nation imports around 60% of the cattle it needs to ensure that there is enough meat to satisfy national demand.
Nos bêtes viennent du Mali, c'est les animaux du Mali, c'est des mâles.
Our animals come from Mali, the calves and the sires. 60% of the trade in animals is intended for the trade in Ivory Coast.
While the government is looking to significantly increase local cattle production, prospective farmers say there's been little incentives and few opportunities for those looking to get into the industry.
It is not easy. You know, in Cote d'Ivoire, if you apply for financial assistance, you have to be very well connected. I have applied everywhere, but to be financed, you have to be referred by someone bankable. Since there is no one to refer me, I can't receive support.
Industry advocates who attended this month's Agricultural and Animal Resources International Fair in Abidjan believe the government needs to take a lead in financing the development of the sector.
Agricultural finance all over the world knows of the funding problem since it's a sector that is too risky. Commercial banks are not adapted precisely to the financing of this sector. It is important that institutionally it develops a relationship with the private sector.
While the nation's cocoa and coffee sectors have traditionally dominated the economy, socio-political crises and constant institutional upheaval has caused a collapse in the livestock production. The government is keen to see local production of meat reach 60% of the demand by 2020. However, industry representatives say access to credit will be instrumental in achieving that goal. Noel Makugu, CCTV.
Quick run through currencies here. The main story that we're keeping a very close eye on are the East African currencies, especially the Kenyan shilling. It's been hovering around 94, so essentially going deeper and deeper into 3-year lows. The central bank, of course, doesn't exactly have the muscle to completely defend the shilling. At best, it can smoothen out that volatility, but the long-term trend very much is biased towards a weakening of the local unit here in Kenya. And that's it for this edition of the program. Thank you so much for watching. As always, we like hearing what you think about what we do around here. Send your feedback to us, Global Business Africa at cctv.com is the email to use. And of course, when we're not on air, Facebook and Twitter are your ports of call. Thank you for your time this evening. See you in 23 hours. I'm Ramanya.